In yesterday's video, we talked about banking contagion. Today, Silicon Valley Bank collapsed. To try to stop contagion, banking regulators shutter Silicon Valley Bank moves quickly to avert crisis. California banking regulators on Friday closed SVB Financial Group. This is the largest bank failure since the GFC, or Global Financial Crisis. The regulator appointed the FDIC as the receiver. This marks the first failure of a federally insured bank since October 2020. This has the markets justifiably concerned. When banks start to fail, people start to say, I hope this is not another GFC. What caused the Global Financial Crisis, or GFC? In a nutshell, banks would lend to anybody, whether they had money or not. The banking sector's greed led to millions of people losing their jobs, and major advanced economies experiencing their deepest recessions since the Great Depression in the 1930s. Extreme greed is a problem that faces society in general. When people focus on money first, all manners of problems arise. We can see this with former Goldman Sachs banker sentenced to 10 years in prison for the 1MDB scandal. He pocketed $35 million in a scheme to steal billions from a Malaysian sovereign wealth fund. Greed and manipulation are everywhere, and the SEC is focused on earnings manipulation by companies. Watchdogs to scrutinize financial reports to sniff out accounting tricks. When I was doing my finance degree a long time ago, there was a section where we investigated creative accounting. I started studying my finance degree 37 years ago. And we were talking about creative accounting back in those days. What is creative accounting? It's just accounting practices that follow the required laws and regulations, but they manipulate things so the profit increases artificially. They also hide things like off-balance sheet transactions. Whenever I read an annual report, I always wonder to myself, what creative accounting am I looking at here and now? So we can say that if this was around 37 years ago, like nearly 40 years ago, what's the SEC been doing? And what are our regulators doing? This is very well-known practice because they actually bend the law. They don't break it, they just bend it. In other good news, US employers added a solid 311,000 jobs in February. But is this good news? No, it's not, because the Fed is already saying a strong labor market will cause interest rates to rise. Fed policies, all government policies, take many months, if not years, to actually play out. And when we look at the jobs report, we can see that last month was a ripper, 504,000 jobs added. This month, 311,000, and we can see the unemployment rate is starting to kick up. This means that the Fed policies are starting to take effect. When we look at the main markets, we can see the VIX absolutely and utterly spiked. We were talking about this yesterday, getting a follow-through, because we saw junk bonds and high-yield corporate bonds actually lose their support. This means risk is coming out of the markets at the current time. Money always needs a home, and that's something that you should always bear in mind. Where is the home of money? Is it in the DXY? Are people going to cash, or are people going into bonds? You can see clearly that the money is sloshing around from the stock market into the bond market. This is driving the yields down and gold up. And also, we notice that there's not a flight to safety in terms of the DXY. The cash is not sitting on the sideline, it's piling into bonds. What we need to understand here, are the markets broken? Is it a time to really seriously evaluate your portfolio? In the main market, all sectors were down in the past trading session, with real estate being hit the most. Don't listen to mainstream media news. When you see a red blanket, there's always some green in there. You just need to look for it. And where was it in the main market? It was in healthcare. And very interestingly, JP Morgan went up. Intel also went up. We have a very specific methodology to look at the markets. It's important to understand Rule 217. No stock market can escape the US's gravity. One powerful macroeconomic driver is the federal funds rate at the current time. And we can see average hourly earnings weren't as high as anticipated. This is a good thing. This will put negative momentum on the probability of a 50 basis point increase. What about non-farm employment change? This will put positive pressure on an increasing federal funds rate. What about the unemployment rate? This will put negative pressure on the federal funds rate because unemployment is greater than anticipated. That means that the Fed's policies of demand destruction are working. How do we objectively gauge what the Fed is going to do in under 2 weeks when it meets for the FOMC meeting? We look at this. We can see a 43.9% probability of a 50 basis point increase. Remember, yesterday it was 68.3%. The markets are very tumultuous at the moment, and if you're going through a life pullback or feeling really upset about what's happening in the markets, this is what the markets do. These experiences, even though they're terrible at the moment, they will make you stronger. For people who have been decades into the markets, we just basically say, oh, it's happening again. And we also say, this is the single best time to be in the markets, but you must know what you're doing. Do not gamble, have your knowledge. And also know that if you're going through a life pullback, our love and healing thoughts are with you. You're not alone. As a global family, we're very, very supportive of each other. Hang in there, the sun will come out again. And when we look at the CPI, we can see it's in this upward path. The federal funds rate is influenced by the Fed balance sheet, and the Fed balance sheet is hemorrhaging. M1 and M2 money stock are coming down. They're extracting money out of the financial system to beat down inflation, and we can see that's working. The 5-year break-even inflation rate and the 10-year have both come down. That's important for us to see. Unfortunately, with this banking scandal, just the latest one in a long line of banking scandals, we can see that this is negatively impacting the markets. I mentioned yesterday that the area of support under the S&P 500 was very, very strong. It was unlikely to crack it, but what you see now is a banking scandal set to ignite. We have actually broken short-term support on the S&P 500 by breaking through the 3880 level. There is still support below, and the most key levels that you must keep your eye on are 3848 and 3700. The S&P 500 is currently 3878. When we look at the 9 sell-offs and recoveries in the S&P 500 since 1966, it's very clear that the level of support has now been broken. Expect negative price momentum. There are a lot of people trading Forex inside our community, so I wanted to give you some very strong structural levels. The DXY is currently 104,602. It has some very, very heavy resistance above, from the 105,570 to the 105,795 level. Keep your eyes on those levels when the DXY starts to spike up. It has a lot of structural support between 103,710 and 103,900. After so many decades in financial markets, I invented the CTKS method to help anyone see where the algorithms would kick in, either to buy or to sell, as well as helping anybody understand where future support and resistance would likely be. When we look at the euro, we can see price action like this, but does it fit the structure? A couple of days ago, I was just explaining that the euro had enormously strong support. Everybody was anticipating that the euro would actually break down and go further down. But that's not the objective dynamic market structure that was revealed from all of price history. There is very, very strong support for the euro between 105.23.8 and 105.33.8. The euro is currently trading at 106.424. And we can see that the euro came up and hit a smart money sell level, and it's back to a smart money buy level. Please be aware that the euro has intense structural resistance between the 107.199 mark and the 107.695 mark. Without the CTKS method, there is no way on earth you would know these things, unless you had access to institutional grade information. Thank you to the many people who've reached out and let me know what they would like to see marked up with the CTKS method. Also, thank you for your very kind comments. One particular person said, "I love the CTKS method because it's the method I can do for myself by myself." You can learn the CTKS method, but it's only available directly through me, and as the inventor, I tell you exactly what it does. With the flight into bonds, we've seen bond prices utterly spike up and bond yields come down. This is pushing inverse real rates up, and gold is a major beneficiary of that. You might remember a couple of days ago I was explaining that gold has very, very substantial support between this 1805 level and 1827 level. So when price came down, I was mentioning there was a huge amount of structural support as revealed through objective dynamic market structure. That support has transformed itself into upward price momentum. Gold is now currently trading at 1864. And what we can see is there's a very strong structural level of support around the 1852 level. Please bear in mind that the 1898 level is very strong structural resistance. It's likely to slow or even reverse gold spike up. As price is always moving in a wave, you must do your daily three-dimensional risk management. We do that through the CTKS code. We understand that we control the trader investment, but the market controls the return, and the market can be like a wild animal. Your returns will come from how synchronized in with market action you actually are. Please do not pay that much attention to news headlines. Just be aware of structural shifts, but don't act on them. You must be aware of the structural support and resistance inside the market. That is your key. And if you see it starting to get weakened or broken, that's when you take action, because the news is always sensational. The returns you make from the market are based on your active learning, your knowledge and your courage. And also, always remember that the market penalizes blame and gambling. Just ditch those two things. You will be more of a financial blessing to yourself and those you love. When we look at the stock market, we pay attention to junk bonds and high-yield corporate bonds because they're very, very good indicators of risk on or off behavior. Another phenomenal indicator of risk-on and risk-off activity is Bitcoin. When markets are about to turn around, Bitcoin inflows just skyrocket. Before markets sell off, Bitcoin tends to get hit first, but it recovers first as well. A lot of people, when they see sharp sell-offs in the market, they just flee the market. They just run away. The truth is, that is when you need to stay. You need to be careful about your positions and managing them. But at the bottom or around the bottom, when things are turning around, that is the single best time to be in the market. Unfortunately, that's likely to be the time when nobody but professionals are in the market. You want to be a professional. Bitcoin is currently trading at $20,026. When we look at the NASDAQ compared to Bitcoin, we can see that the NASDAQ and Bitcoin tend to move in the same directional correlation. It's important to understand these interdependencies. If you were looking at Bitcoin currently and trying to figure out where Bitcoin could go down to, without the CTKS method, it's almost impossible because you'll rely on recent indicative price, and recent indicative price is the way to RIP your money. Instead, we need to look at objective dynamic market structure. We need to know where the strong levels of support are. And where are those strong levels of support inside Bitcoin? They're from 16,252 to 16,687. By getting on the right side of the percentage, you can make money no matter what kind of market action is occurring. It's not necessarily going to plummet down to 16.2. The concept is there are many smart money buy levels between that, but the strongest support is around this particular area. Bitcoin is currently trading at $20,050. We can see in the past 24 hours, with the contagion, the banking contagion in the US economy, Bitcoin came down as people flooded into the bond market. You can see how important it is to actually understand what's going on inside the main markets. Because if you were in Ethereum just follows Bitcoin's gravity. We can see BNB following Bitcoin's gravity down. What does that actually mean? When Bitcoin comes down, as you can see here, Ethereum comes down, Binance Coin comes down, XRP comes down. Even though XRP was inverting on Bitcoin, we know the rule, no alt can escape Bitcoin's gravity. And there it is playing out right in front of your eyes. These rules and many others are explained inside the CTKS Masterclass. We can also see some relative strong price performance from ADA. When the market was bleeding, ADA bled far, far less and recovered far more. It is said that the strong become weak and the weak become strong. ADA has been very weak. It's starting to show strength. You want to get inside and onto a crypto when they're starting to show strength. When they show weakness, they can go towards zero. Just be careful of that. When we look at Matic, we can see Matic has followed Bitcoin's gravity, but look at that strength in terms of that recovery. As price is always moving in a wave, if you get on the right side of the percentage, you will make money, no matter what kind of market condition it is. In the news, what does Silvergate collapse mean for crypto? Silvergate, of course, was a crypto-friendly bank, and we know the banks are under a lot of scrutiny at the moment. And Sam Bankman-Fried, and he is pretty freed at the moment, is not making anything easier. So what could this mean? It could mean increased scrutiny by regulators. And why would they do that? Because they want to release their own central bank digital currency to compete directly with crypto. But there are a handful of US senators and a handful of very influential people who understand that crypto is just the key to the future. I had an interesting exchange with Peter Schiff on Twitter. It went a little bit like this. Peter, you can't take gold with you when you're in interstellar travel, and you can't take fiat and banknotes and bank coins either. It may sound like science fiction, but that is exactly where the world is heading. We're heading off planet. That's why digital assets and digital currency is going to be the order of the next financial evolution. The senators that are out there fighting the big banks' interests, and that's all that they're fighting. Understand that without this competitive edge, other countries will gain that edge. And what happens to the balance of trade of the US? It will go negative, even more negative, as the brain drain to other countries, for example, to the Middle East, will intensify, where crypto is being adopted with open arms. A lot of people say that blockchain technology will not be used in the banking sector. Well, after all, Bitcoin and crypto, it's just a fad. This is, of course, not the case, but a lot of people don't understand what crypto is. Crypto is the ownership layer, the protocol layer of Web 3.0. And unlike Amazon, which is an internet company, you can only own Amazon through shares, through the stock market, but you can own protocols in Web 3 directly. Nigerian president-elect aims to use blockchain technology in the banking sector. This will become more and more of a headline as we progress, not just in Africa, but across the entire world. Existing government departments are not going to make it easy for crypto. US Fed to create new crypto team amid concerns about unregulated stablecoins. So long as the government can control everything, don't worry about it. So the Fed's Vice Chair for Supervision said that central banks do not want to curb innovation. They just want to stifle it. The interesting thing with crypto, it was developed after the GFC as a way of actually safeguarding money. And of course, a lot of people will say, yeah, right, Ken, it doesn't safeguard money at all. Look at how much the prices have come down. That is true if you've just been into crypto recently, but if you've been in for a long term, the prices are quite good. But for the majority of people, they've just come in recently to crypto, so it's been really, really brutal. The one good thing that you can rely on, crypto is going to remain. No matter what the governments do, there is always another government that's willing to open their arms to it. And we've seen this in the Middle East. There's a lot to know about crypto. It's not like throwing a dart at a dartboard. You must know what you're doing. There's a lot of moving pieces. When we look at the number of shorts entering the market, because of the banking turbulence at the moment, they've been rewarded and the shorts have been rewarded well, but the longs are starting to enter as well. They're starting to buy the dip. With such a sell-off, we may expect billions of dollars of liquidations. Let's check it out. In the past 24 hours, there's been 301.95 million in total liquidations across 102,843 positions. And when we look at total liquidations in the past 24 hours, 75%, or say 76% have been long. What about the past 12 hours? 63% long, so decreasing. What about the past 4 hours? Ooh, gone the other way, 60% short. And what about the past hour? Whoa, ay caramba, 97% short. Whenever one particular party gets so certain that the market can only go down, that's the shorts, or only go up, that's the longs, the market will turn in the exact opposite direction. That's exactly what we're seeing right now. Artificial intelligence is going to be a really key play in the crypto market. So I thought I'd just give you the top 8 AI plays, and we'll just keep our eye on these, especially their recoveries. The graph, we can see the graph was fairly weak before Bitcoin sold off, but it staged a quite nice bounce. What about AGIX? AGIX has been very weak and it's just got a minor bounce. Rose, also following Bitcoin's gravity, as is Render, RNDR. Keeping an eye on these particular cryptos could be a very, very good idea. Elon Musk has said he's all about AI now, so that's going to create a lot of tweets in the Twitterverse on that. So we can see Fetch AI, just aligning itself with Bitcoin's gravity. Injective Protocol, INJ, doing really, really well. Look at that strength in INJ. This is what we want to look at. We want to see what recovers most quickly. We want strength. We don't want weakness. Ocean, we can see, has recovered very, very nicely. And RLC is still under price suppression. When you actually look at this, I want you to draw your eye to this particular little mountain here. You can see Injective recovered to that little mountain. That little mountain over here on Ocean, exactly the same. Look at RLC, way underneath. What about Fetch, or FET, way underneath as well? Rose, way underneath. Render, way underneath. AGIX, you get the picture. So what you're actually looking at is potential cryptos will lead the path or lead the directional path for the other cryptos. We'll keep our eye on this. There's so much to understand when it comes to pattern recognition. And the Masterclass talks about pattern recognition until the cows come home. Don't get sucked in with the media headlines. There are always opportunities in every single market. If the markets go blood red, Generally, the opportunities tend to concentrate. They can be easy at times, but you must be prepared for them. When looking at the greatest gainers over the past 24 hours, Carver, Quant, Stacks, HBAR, Ethereum Proof of Work, Matic, Atom, and Bone. The greatest losers, HT, BNX, Dash, Tron, Litecoin, Immutable X, ZEC, and Monero. Each and every day, I share a very rapid overview of what we do, our methodology from inside the CTKS Masterclass. First of all, we need to get ready, prep and get the knowledge. Look outside to the external markets, checking world events. Then we pop back inside the crypto market, finding the market's focus, understanding that opportunities reset daily, and we must enhance our pattern recognition. Enhancing your pattern recognition is one of the most powerful things that you will ever do, no matter what market you trade in or invest in. Unfortunately, many people are beaten mentally before they ever commence. And this is not peculiar to trading and investing. This is just a fact of life. This is just what happens. When people say, I can't do this, they're correct. When people say, I can do this, they're correct. And the same person can say both messages. That's why having positive excellence as your aim and real wealth as your focus is critically important. If you don't control your mind will control you. And if your mind's controlling you, fear will be controlling you. You don't want your fear to live your life for you. And that's why before buying and selling, and there's so many techniques to do that, you must master emotional control. It's absolutely critically important. Many people who are not in the markets for decades just think it's all about buying and selling and getting the right levels. Of course, that's incredibly important, but if you don't have the right mindset, those levels won't be as effective as they could be. I'd like to thank someone you know for his very kind generosity in funding a CTKS partial masterclass scholarship. Someone you know found the masterclass to be life-changing and wants to pay that forward. To be an awardee of the scholarship, it's critically important that you do active learning. You have to demonstrate to me that you are persistent and committed. Why is that? Because I want you to succeed, as do the people who put forward the scholarships. And the masterclass has 212 lessons in it. It's literally like a university degree. But it's about making money. It's the best kind of uni degree that there could ever be. If only uni degrees were like this, that would be awesome. If you would like to apply for the partial masterclass scholarship, the link is in the description of this video. And if you've already applied, showing your positive excellence each and every day is a way to get towards becoming an awardee. Positive excellence is what we look at. In a time like this, when there's so much bloodshed inside the market, it takes a lot of courage, persistence, and commitment to stay inside the market. That's what we're known for as a community. We are rock solid in the red days. They don't bother us at all. You will also get to a point where they don't bother you at all. In fact, they can be incredibly exciting. We only go long at spots, so we're not going short at any stage. So this is real skill that we have as a community. And I would like to thank the numerous people who have reached out and provided trades. It's just been, the markets have been so chaotic, I've just needed to give guidance. But I will certainly share those trades in the next couple of episodes. We've been talking about money as a focus, especially at times like this. I think it's important to actually understand, and we can comment on what is the role of money when it comes to trading and investing. Most people will say, well, that's why I trade and invest, to make money. Actually, if you trade and invest to make money, you're doing it all wrong. This may sound unbelievably counterintuitive, but it's the fact. The way and the reason that you trade, the way and the reason that you invest is to get the right process, to get the right methodology. Money must be a secondary thing. That's why I say it's all about levels and not about price. You must disconnect yourself from money. In the comments today, it would be very good to talk about systems. If you're not focused on money, you have to be focused on something. That should be your systems, your processes, your methodology. I'd love to hear your comments about that. And potentially those people who are they're committed to their methodology, their processes. How did you move from money, a focus on money, to a focus on methodology? I think that will help a tremendous number of people. And please keep on reaching out and letting me know what's important to you. What's important to you is important to me. I want to make sure that I cover what you need to know. And the only way I can do that is for you to let me know. What you say really matters to me. Please just pop onto this form and you can fill it out multiple times as time progresses as well. Just let me know how I can help you the most and I will do so. We have the CTKS Creed to develop better habits. These daily positive affirmations will create better results in your life. The words definitely for today: life pullbacks give me the strength for the next life rally. I am dedicated and committed. I win or learn and never blame. Just have your three-way strategy playing out, your 10-5-10 rule playing out inside the market as well. Mark up your charts with the CTKS method. That will help you to sleep really, really well at night. Have a fantastic day or night ahead, my friends, and Kate and I look forward to catching up with you tomorrow. Bye for now.